How does cash stuffing work? This viral Gen Z TikTok money trend is taking over TikTok right now. One of the most recent money fads to take over TikTok is cash stuffing. This money trick might help you pay off debt and stop compulsive internet purchasing. What is cash stuffing? According to a recent survey, Gen Zers and millennials are especially fond of cash stuffing, which involves inserting actual dollar bills into envelopes, notebooks, liquor bottles, or other containers. During the spring, TikTok users became popular for hiding $1 notes in unusual places. More than half of young individuals regularly use cash stuffing to manage their money, save money, and pay off debt, according to research from the personal financial site Credello. According to a 2021 MIT study, handing over cash at the cashier rather than using your credit card causes more pain, which is a good thing. Using the almighty money instead of a credit card might increase our chances of keeping to a budget since we only spend what we can afford. Credit cards have an intangible deal with it later element to them. But what does it take to effectively implement a cash-only approach in our highly online society when digital payments are the standard and over half of the customers use mobile wallets like Apple Pay and Venmo to transact? Is it practical? Number 1. Make a practical plan. Although some extreme cash hoarders may attempt to pay for everything with dollar bills, the majority of us find this impractical given how many businesses and services prefer or even demand digital payments. When you have more control over your in-person spendings, such as the changeable monthly costs like food, petrol, or household supplies, cash stuffing works pretty well. Make a plan once you've decided which invoices and payments you'll pay with your cash. Setting yourself up for success begins with understanding why and how cash stuffing might help you achieve your goals of either saving more money or spending your money more wisely. For instance, setting aside that sum of money in cash each time you receive a paycheck in a separate, clearly labeled envelope might help you achieve your goal of saving a specific amount each month and putting that envelope out of sight. Alternatively, if you want to utilize cash stuffing to better control your spending, you may set aside a certain amount of money each month for necessities like food and gas, and then use the remainder to make a monthly payment against debt. You may theoretically stick to a cash-only budget when paying off credit card debt as Ricky did. You could either physically pay off your credit card debt at the issuer's bank or ATM each month, or you could pay digitally using a checking or savings account. Number 2, determine how much money you require each month. It's important to calculate how much cash you'll need on hand, even though this involves some tracking. Just look over Precious bank statements to see how much you typically spend on different categories like food, petrol, electricity, apparel, and entertainment. After that, decide on a spending cap or a savings target and allocate the relevant amount to each envelope. Be aware that many set monthly payments, such as rent or mortgage, credit card balances, loans, or even a Netflix membership, sometimes demand some type of online payment in contrast to variable expenses. Pro tip: to guarantee that you always have extra money at the end of the month, put 10% of each salary into a savings envelope. Number 3, put your credit cards away. To rely less on credit cards to cover bills is a significant factor in why individuals choose to pay with cash. Additionally, it makes sense to pay off outstanding loan balances as quickly as possible, given that the Federal Reserve is continuing to boost interest rates to combat inflation. Cash stuffing can reduce the urge to overpay in actual stores, but it won't stop you from doing so online. Therefore, be careful to review your plan and balance the expenditure if you do find yourself needing to pay for anything digitally that would typically come from your cash stuffing method. Also, think about deleting stored credit card information from websites and your phone, which makes it too simple to make impulse purchases. It takes more time and effort to input your card information before making a transaction, which may assist in lessening the desire to spend money. Number 4, expect to go shopping more frequently. You can see how having a cash-only budget would be inconvenient on several levels when you consider how it would affect your everyday activities. Consider first taking money out of an ATM. Then, if using cash as a method for spending, consider going to a shop in person rather than purchasing food online and paying with a credit card because it'll take more time. With a cash-only economy, we would have to travel further between destinations and abandon the quick gratification paradigm to which many of us have grown used to. And although that's not necessarily a terrible thing, it is something to consider. Number 5, hold those invoices. It's crucial to keep track of your monetary transactions, especially for expensive products that you might wish to return or merely save as documentation. Like credit purchases, cash transactions can't be monitored online. After making a transaction, always request a printed, email, or text version of your receipt. Number 6, recognize the compromise you're making. Paying using cash can help you reduce your expenditures, start saving money, and reduce your debt significantly. You do, however, also forfeit some advantages. For instance, if you pay for something with a credit card and pay the debt off in full each month, you might be able to gain points or incentives that you wouldn't get if you paid with cash. Additionally, you're not receiving interest on your funds. Also, there's no method to recover lost money. Besides that, some credit cards provide purchase protection, which entitles you to a return or compensation if an item you've bought is stolen or unintentionally damaged. Unless you purchase a guarantee, paying with cash won't provide you with the same level of assurance. Finally, choosing not to use credit cards at all may prohibit you from establishing a strong credit history, which is essential if you want to lease a car, purchase a house, or simply move into a new apartment. Learn how to increase your savings with some of our favorite savings challenges and what to do if you're unable to pay your credit card bill this month.